G'day, listeners, and welcome to another episode of the Scouting Australia podcast, powered by Australian Property Scout Buyers Agency. I'm your host, Sammy Gordon, and today, guys, we are back in the studio, back with Jimmy, the silver dog Ibrahim. It's raining in Melbourne, mate. How are you?
Mate, I'm very good. Not the only dog in the studio. We've got another
Winston's
dog.
back.
Winston under the table here.
He looks as sleepy as you.
He's that inspired he's fallen asleep to your voice. So it's great to be here in Melbourne. The rain has started to fall. It's a typical Melbourne day.
That wall of cloud is black, and I can see the water running down the windows.
Can't wait to have you back, Sammy, in Melbourne.
Can't wait to not come back. But Jimmy, mate, we're back for a Q&A. You've apparently got some loaded questions, mate. I haven't seen anything. The listeners love these things short and snappy, mate. So we're going to jump in and
let's
out.
Get into
Let's
it.
Go.
It's going to be really punchy, Sammy. There's 10 of the best questions that our producer has put together. So let's get straight into it.
Ball Z thing at me. What's this?
Are you
a dog card?
Yeah, that's it. That's it. The first question is from Bianca. Now, because it's been a male-dominated Q&As, the ladies are getting in on the act.
The ladies are back, aren't
they? Well, they, it's an equal society, Sammy boy. So Bianca's going to kick us off. Ahoy, boys.
Ahoy, Bianca.
My question is around selling, Sammy.
Okay.
Should you consider an agent's commission when selecting a selling agent? And should you steer away from capped commissions? Now, you've just recently been selling a lot of properties.
Yes.
Has this been a consideration for you?
Mate, I typically will sell through whoever I think is going to achieve the best dollar figure. I will sometimes factor into the equation if two agents are exceptionally, like very, very, let's say they're at the top of their game, they're both selling very, very well, and they're both, effectively putting money around about the same, appraising around about the same range in terms of an actual sales price. If that is the case, then yeah, we'll factor it into the equation. If I like one slightly over the other, but maybe the one that I like slightly more is slightly dearer, I might even just say, hey, man, I'm tossing up between the two of you. They're, X percent, or they're at X percent, you're at X percent. Can you match them? I'll go with you if you can match them. A lot of the time, it will really depend on the market conditions, and some of the best will say no. I know us as a buyer's agency, you can't negotiate on our fees, but I guess it depends on how hungry they are at the time and how confident they are and how hard they work for that sale as well. I know how hard we work in terms of the buying side of things as well. So, man, it all really comes down to that. I wouldn't not choose someone that I think is the best because they're dearer than someone else. Because someone that's the best and they can get you another, let's say, 50K, they're worth their extra, percent or whatever it is that they are extra. So the best will typically command a higher fee. Again, like with the capped commission stuff, like you typically won't find the best agents are working under capped commissions.
Can you explain the capped commissions for people
someone
who don't
might just
understand?
I think it was Purple Bricks or whatever it was back in the day. They're gone now, but Purple Bricks back in the day, I think they were capped at 8,995 or something like that. As a com, like it couldn't go higher than that. But at the end of the day, like if you want the best, they will charge. They're either at or the highest out of everyone, but they should have the runs on the board to back it up as well. So I don't factor it too much into the equation. I know what the best in the BA space, cost. To be honest, mate, we're not the most expensive, but they're definitely not the cheapest. And so, man, you get what you pay for. So I definitely wouldn't be going for the cheapest. And what I have done in the past is if someone is like miles ahead of someone else from an appraisal perspective, if I do still like to want to go with them, I have done sliding scales before. And a lot of agents actually, there are a number of agents I've worked for that have actually put it forward before too. And so let's say this is a real life example of something of mine. I think it was, everyone else was sort of sitting around about $1 million to $1.50 million. I think it was from memory. And these guys are sitting at like 1.1 to 1.15 or something like that. And I said, well, if you're that confident to get over $1.50 million, over the 1.1, let's put an X amount sub 1.1 and an X amount over 1.1, and they accepted. And I think it was from memory like 1.5% sub 1.1, and I think it was 2.5% for over. So
did you sell?
Considerable amount? Yeah, I sold it, but I think I sold just under what the range was as well. So. But at the end of the day, man, money where the mouth is. Like they took it on that. I also selected them based off the fact that they put their money where the mouth was from that end. They still achieved over the range of what the others were. But yeah, man, like it was. I think the bottom end of what they put the scale at was what the others were taking as comms, and they were at the higher amount. So anyway, it just worked. But long story short, I wouldn't make my decision purely based off a com structure. And the best will typically cost the most.
Well, when we think about investing, an investor will always think when they're spending money, how much is it going to make me, not how much is it going to cost.
For sure.
So it's the same way on the way out.
100%.
Yeah, great. Okay, moving on. Next question, Stefan.
Stefan
Stefan has said, hey, big dogs. It's called you a dog as well.
That's all right.
The big dog. We do call you the big
Maybe
dog.
you're talking about you two, Winston and June.
We call you the big dog. When dealing with insurance,
Yes.
when would you actually claim for something versus worrying about it increasing your premiums, i.e. no claim bonus? Would love to hear your thoughts around this, Sammy boy.
Yeah, man, it really comes down to your insurance provider and how they actually work out their premiums. I know from memory I'm pretty sure it's Terry Shear, who's one of the largest providers of insurance premiums for investment properties across Australia. From when I checked, their premiums weren't actually affected by an individual making a claim. They were actually affected by the postcode, the amount of claims made in a particular postcode. So it's almost like a postcode risk factor, right? Yeah. With how that came in as well. But man, it's all sort of rated differently, and all policy providers are different. Now, the way I always used to really assess it was, man, I would have a look at how much something was going to cost, and it's all what is relevant to an individual, right? So, and how many properties you've got. Because if you've got 1 or 2 properties, and something's going to be $3,000 versus making a claim, it's going to cost you $1,000 for an excess. If you're at an early point in your journey, that extra $2,000 could make a big difference. So probably do it. But if you had 10 properties and you did it, and all your premiums with potentially a different provider went up by 20%, well, it's going to outweigh the benefit. So I think it's always just like a sort of a cost benefit, way up as to what's going to make the most sense in that scenario. And yeah, man, it's going to be relevant to each individual investor out there. But I think you got to think, put the thinking cap on for it. And exactly that scenario, if you're a multi-property investor and there's not that much difference between your excess and what you're actually going to claim and write off as well, save it. I wouldn't be putting it through it. I literally think it was something like 12 or 13 years that I invested before I think I was at 60, 70 properties, something like that, before I ever made a claim. Yeah, wow. It was just like, that was so close a lot of the time to doing it. It just wasn't really worth the cost, worth the spend, with the headache, where I could just
Should it be at least, is there a certain ratio?
There isn't a certain ratio, because it all depends on the investor and how many properties they've got. And that's why, I think it's just it's a bit of kind of think of it with a bit of common sense and make a decision around it. I know it's sometimes a bit different to make it a business decision from a common sense decision, but I think you just got to be a little bit smart about that.
Yep. Okay. Moving on. Question from Kaz, Silver Dog and Bull Shark. Yeah. Big fans. Thanks for all that you guys do.
Is this our Kaz? Or?
I don't know. Is it from our Kaz? No, it's not.
Too many other Kazs.
There is another Kaz. There is another Kaz. Kazalia.
Maybe it's a Karen.
I think it's Kazalia.
Maybe it's a Karen. Shortens it to Kaz.
Could be.
Kaz dogs.
I think it is.
Kaz dogs.
Yeah. Silver Dog and Bull Shark. Big fans.
Kaz dogs.
Yeah. Looking to start investing. I'm starting to research and look into the best areas to do so right now. Is there any hints that you can give me to know if my local market might be a good area to invest in? You're asking, Kaz clearly doesn't know Sammy. She's asking you for some hints as to whether her local market might be a good area to invest in.
There's just so many factors to that. You know what I mean?
Give her something. Come
on.
We're
talking about that's like the broadest question ever.
Give her a broad answer.
Yeah, look on.
She's looking for a very specific answer to your very broad question.
I mean, there's so many things that to look at from obviously a data point metric perspective. How many infrastructure projects are going on in your immediate area? What's the population growth like? Okay. What's the income to house price ratios looking like? What's the rental yields like? What's the vacancy rate like? All these different things. How's the local economy, transitioning at the moment? Where's the cycle at in your market right now? Are you at the top of the cycle? Are you bottom of the cycle? Are you halfway through a run? Are you tail end of a run? Is your market coming down? There's so many things to give you a hint. There's just so many things that get overlaid on what we look at from a research perspective in terms of, does it make sense to buy in this location? You want a hint, go and apply all those metrics that I just asked for, and then how does the market look from those perspectives? And I think that's probably the easiest way to have a look at it if it makes the most sense. But the chances that your local market is one of the best locations to buy in Australia is probably pretty slim.
Pretty unlikely.
Pretty unlikely. I would say if you're just starting at looking, I'd probably keep listening to a few more podcasts, spend a bit of time actually doing some research. Don't rush out and buy. Take your time, get yourself educated before you make a decision.
All right. There you go, Kaz. Hopefully you got some value out of that.
Love you, Kaz dogs.
This is from Alex. We're not sure if Alex it could be anyone. Could be.
Is this Alex at APS as well?
Is it? No. This is Alexandria.
Okay.
Yes.
Hi, Alexandria guys. That works at APS?
Well, actually, no. This is a guy.
Oh.
Because he mentions his missus. Well, it could be. I mean, hey, Could be. We don't know who it could be. Hi, guys. But because I got my PPOR first and a bit cheaper, bought it for $750, after reno, it's now valued at 1.5 mil. Go on,
done.
Alex. Whoa. Do you reckon I can still build a decent portfolio? The missus and I have a combined income of $280,000, and our goal is to get 10 investments as quick as we can. But we love entertaining and living in our current primary residence. Not saying it's our dream home, but it's one we can build a family in for the next 10 years. I'm 33, she's 30. We're both vegans. No, they're not. We're in Newcastle, and we would rent. If we would rent, it would maybe be $150 cheaper than our actual mortgage. So they're open to some suggestions from you, Sammy boy. There was a lot there.
There's a lot there.
But you got the gist.
Yeah. So there's so many things to take into equation here. And this is, for me to properly dissect the way I would do this is for a School of Property webinar.
Okay.
Because I would say, I would break down exactly what I would do in this scenario and just break down what you could do rent investing versus owning their own home. Because it's not just the $150 a week difference between your mortgage and the rent. Primary residence debt is an absolute game changer, regardless of, depending how much you have on it. But the ultimate fact is you also need, do you say how much debt he's got?
No, but if they bought it for $750 and it's now worth 1.5, we don't know how much they spent on the reno, but there's a decent amount of equity there.
Well, you would think so, but it depends how many, has he got any properties already or he's starting?
No, we don't know.
So he's starting, I mean, this is the thing, there's a lot of gaps sort of in this assumption as well. But the issue is the more that you leverage and you release equity from your primary residence, the more that you do cap yourself from that end. I think it comes down to two things, but like you still need to have a lifestyle play. I think it needs, if the lifestyle play is super important, which he's saying that it is, then it really depends what's more important, the lifestyle play or getting to 10 properties as quickly as you can. Now, if the goal is to retain the lifestyle play and get to 10 properties as quick as we can whilst retaining the lifestyle play, then it's a different strategy. To if the 10 property goal is the most important thing. So yeah, man, I think like there's probably there's too many things to sort of unpack within that I wouldn't be, that I'm not just going to do sort of openly, I guess, here. But yeah, man, I think it's one of those things that the goal, what the primary goal is, retaining lifestyle or the portfolio, is what needs to be figured out first. And then once that's figured out, the correct strategy can be devised from there. But let's assume that they do have a lower debt level on the primary residence, and there is an amount of equity that we could strip from there.
And no other properties.
Then yeah, man, like it can definitely still be done. I've never said it can't be done, but it's going to take you longer, and it's going to take you longer to be able to buy your dream home. But if you're happy to live in that house and raise a family for the next 10 years and build a portfolio on the side, and you love that home, then do it. Stay there. Live in that home. Love the home. Raise a family in there. And it might take you an extra 5 years in reality to build what you want to build. Maybe more, depending on how long it's going to take you over the whole journey. Compared to rentvesting. Yeah. But at the end of the day, if you also live a great life, because we're all investing to live our dream lives, right? But if you're already living a great life and happy with where you are right now, and you don't think you could find a place and rent something similar or slightly better for less money, that's the other thing to really factor into the equation. Could you actually rent something similar? We talk, I'll throw to a different story here as an example. Brendan Gagan, head of education over at School of Property, has just put his house on the market, and the difference in what and they love where they live, but their mortgage difference between what they own and what they could rent, their home now. I don't know the exact repayments on it, right? But but I know the rental difference. Anyway, the repayment to the rental difference, they're going to be saving like $500 a week or something like that, and renting in a significantly better, like nicer house than the one that they are now, and they're getting all that borrowing back and all the cash back out.
The lifestyle is going to be improved.
Lifestyle's actually going to improve,
and he does have kids. It's not as if he's just starting out. He's got three kids.
So like it's man, I think it's all relative, and I think it's. A lot of people love the idea of the primary residence, but just remember something: you've already the guy's already doubled the property's already doubled in value. So has that cycle also finished? Like, could you rent there and it'd be significantly better from an investment perspective to rent there and go and invest somewhere else that's going to make you more money? And then in the next 10 years, maybe buy back into that location, but a significantly better house before the cycle starts again, or 5 or 7 or 10 years or whatever, before that next cycle starts, and buy a better house in a similar location.
They're in Newcastle, yeah.
Yeah, you know what I mean? So it's like, what really is the overall goal? And can you really not rent and retain that lifestyle, but then have a significant improvement to your actual journey?
That's an interesting. You're giving him a lot to think about there, Sammy boy. You don't become the head of education without a bit of knowledge there.
Unless you just self-title yourself that. Unless you self-title yourself that. I do agree.
He did actually self-title that.
I know.
Is anyone actually, can I give my own title?
I've already given you a title. You can't change it. It's dog. Head of dogs. Actually, no, Winston's head of dogs. You're just dog.
I'm head of canine.
You're dog of dog.
All right, moving on. Sarah.
Wait, any recap on that?
I like it. I think, do you want me to, we're going to recap that? You went on for about 10 minutes.
You're a dog.
Sarah is the next question. Hi, Sam and James. Well, that's very polite. Jeez.
Why are so many women
this is a
this time?
sophisticated listener. Keen to hear your thoughts on how you both attack the blow. How do you and clients manage multiple large expenses such as land tax, etc.? I'm sure there's a cash flow strategy piece here, especially for larger portfolios and or when scaling and all capital is put into deposits. So, Sammy, you have a very large portfolio. What advice would you give around this? Large expenses?
Large expenses like land tax. I think it really depends, man. So like my land tax bill didn't really get expensive until like the last couple of years. We invest so heavily into blue collar style markets that our cash flows are very strong. We're also very strategic with entity plays as well. So I never had a high exposure to land tax. Land tax for me, it's a tax that smashes the blue chip investors. Because when you're a blue collar investor, your rateable land value is so low. You can also typically distribute and spread yourself out enough, that you can mitigate land taxes to quite a considerable level. So look, I will answer the question, but the realistic fact is by the time land tax actually became, I won't even say an issue for me, but started to rear its head in my portfolio, the portfolio was so net positive cash flow that I didn't even notice it. Like it was just a cost of doing business. It was an expense during it. And I think like you need to really assess the portfolio and what you're buying, where you've bought, what you're owning, what you're holding. And if something's like decimating your cash flows because of land tax, is it the right asset in the portfolio? And if the answer is yes, then you just got to plan and plan accordingly to be able to
buffers.
Yeah, you got to plan accordingly to be able to carry that and pay for it. There's no difference to maintenance or council rates or water rates or anything or insurance or anything like that. Like if it's an asset that you are holding and that is a necessary cost that's associated with it, then man, it's a cost of doing business. You got to plan for it. Yeah. Same as all those other expenses.
Yeah. I think you hit it on the head there. I mean, you got to have the budget for it. You got to have the cash flow. You got to have the buffers for it.
You should always be planning and forecasting.
And is the juice worth the squeeze? Like if you're holding all these expenses, but the property's not doing anything, then clearly you got to weigh it up. But if you are getting the growth, then it is worth it to hold on for that period of time. Yep. All right, moving on to Daniel. Hey lads, I'm 18 and have started saving my deposit for my first deal.
Well done, mate.
I want to buy with APS. How much do I need to get started, Sammy boy?
Right now, man, minimum budgets, I think from memory right now is around about 80 to 90K, depending on LVR. I think from memory about 80K is like the full bottom end sort of shoe in the door right now. 90 to 100 is sort of like the baseline that most people are working with right now. But yeah, man, you're trying to get first foot in the door, first deal on the table right now around about that $80,000 minimum budget.
Now, there is a few different options that he may have available to him.
Sure.
So moving on to the next question, Sammy boy. This is from Liam.
Oh,
surely this is not.
This is the Liam.
All the way. Is this Liam?
Wait.
Hold on.
Was it one before Daniel as well? So that was Daniel from a team. This is team questions.
Now that's not. Liam's he's in Thailand. He's sipping pina coladas. He's not going to waste his time writing in and listen to you.
Tickies, bro. He's tiki in
He's
Thailand.
one of your mates from school. He's heard enough from you. He's not going to ask your opinion on this kind of stuff.
You're a dog.
So,
what's the question?
This is Liam. Hey boys, love the podcast. Long-time listener.
Definitely Liam.
Well, this is definitely not Liam. He's not a long-time listener.
What do you mean?
He doesn't listen.
What do you mean he doesn't listen?
He's on a tiki.
You're a tuk-tuk. Hurry up. What's the question?
If you can't start investing yet by yourself, but could invest with other mates who are keen to get started,
no, Liam,
would you do
I'm not partnering with you.
Would you do it? I would partner with Sammy. I'd say, Sammy, let's do partnership. You put all the money in, you find the deal, and let's be mates. What do you reckon?
Yeah, we'll be mates.
Deal?
We're not doing a deal together.
Come on.
Wait, hang on. What's the question?
Nah, the question is, if you can't start by yourself, so clearly he doesn't have enough money, but could invest with your mates, so pull together your funds, they're keen, would you do it?
Okay, so this is like, to me, this is like a very similar question to like your first homeowner grant schemes and all the rest of this sort of thing, like guarantor loans, all that sort of stuff. Like if there's no other alternative and no other option, and it's like a considerable time frame away from being an option, then yes, I would consider it.
Considerable time? You mean 2+ years or a year?
No,
or?
I'd probably say like 12 months.
Okay, 12
so
months.
if you realistically couldn't get yourself into a deal in within 12 months yourself, then I probably would consider it.
Okay.
You know, but I would be wary of how many people you're talking about. Like you said, mates. You know, if you could just partner with our mate on our deal, but just you need to have a very, very clear exit plan. So like, you know, let's say the name of the game is when we have enough equity to release a deposit, release enough for us each to do another deal separately or something, or maybe even to do another deal or something like that. Like, I don't know, or just there needs to be a clear exit strategy around what you're going to do in terms of like being done with it as well. Now, if you really were struggling, you didn't have enough cash and like you needed 2 mates to put together deposits and like another mate or 2 or whatever for serviceability, there is always like the potential, and I have seen some people do it. Just as a heads up, we don't facilitate that at APS. Like we don't help people with that or that many associated parties. It is a headache, and we're not like it's not something we would take on. But 2 people, 2 mates, whatever. Let's say that was the case in the scenario. Banding together, one's got the cash, one's got the borrowing, bang, do a deal, whatever. Just be super clear on the exit strategy around what it is so that you don't end a friendship over
Right.
you know, a dispute over a deal. When you're very clear from the outset, you know, you're clear with what, you know, just both parties are clear with what the intended procedure is going to be or the intended exit's going to be on the back end of it. There can be no qualms, no whinging, no bitching, whatever. Just stick to the game plan.
And
That's
also,
it.
what if they said, look, we're going to plan to do this ongoing and hold it for the long term?
Yeah.
What would you say?
I mean, this is the thing. Like, if the plan was to do that over the longer term, and you almost like, you did it like a partnership together. Like, I personally am not a fan of it.
Me either.
But if you if that was the only way to do it, you know, and you wanted to maybe try and scale into 2, 3, 4 properties or something like that, then that's okay. But like to me, there's always got to be a time where you peel off and you do it yourself. You know, unless there's a serious advantage to both of you doing it. One's got the cash, one's got the serviceability. Bang, maybe it works over time.
Yeah. I don't think it will. I always encourage or discourage people that get on the call and say, I'm going to do this, because I don't think people think it through. I don't think they think beyond just doing the deal, because especially when there's 2 brothers, for example, want to do a deal and they've both got partners, I'm like, your goals are going to change. One is the dealer. And so your goals are going to change, and that's going to create hostility because you're going to want to do something someone isn't. Unless you're completely in line with every single aspect, it's going to be complex. And why would you be beholden on someone else?
It's too messy.
All right.
It's too messy. Because at the end of the day, like someone's going to get a partner and the goals are going to change. You hear about it all the time. It's just too messy. Go, yes.
This next one is from Aiden. Do we have an Aiden in the team?
Do not have an
thank
Aiden.
God. G'day, legends. Congrats on the house, Sam.
Thank you, mate.
And thanks for the content you guys put out there.
Thanks, Aiden.
How can I motivate my real estate agent to sell my property quickly without appearing desperate or giving off fire sale vibes? FYI, I'm currently selling 2 properties and go again with APS. What would you do?
What would I do? Man, so like what I always try, like, I mean, has he already selected the agent or?
Yeah, it sounds like it. Yeah, because he's currently selling 2 properties, so he clearly is the campaign's not moving as quickly as what he'd like from reading through this.
Yeah.
So he wants to motivate the agent to move the property quicker, but he doesn't want to give off vibes that he's desperate to take any money, because then I'm assuming he's fearing he's going to be conditioned by the agent to take a lower price.
Yeah, I get you. Man, I would just uphold him to what, like, to be honest, it depends how far into his agency agreement is. Now, how far he's into his agency agreement, because they typically have 90 days on him. Man, if you're already on the market, because typically, like, let's say you sign and you're 30 days before you launch, and then you launch and you're 30 days in, this guy hasn't shifted, he's not bringing you offers, all the rest of it. Just go, hey, mate, just reminding you got 30 days left on this thing. I don't want to go to someone else. I'd love to be able to sell it through you at the price that you, that we discussed, that you promised me at the start.
100%.
That's still my expectations around what I'm expecting from a price point perspective. Is there anything we can do to move this thing, bring this thing forward and get this thing sold at the money that we discussed? So you're not talking about dropping the price. You're talking about this guy or girl upholding the price that you told us that we're going to be able to sell it at.
Yes.
I don't want to have a chat to anyone else. I still want to sell it through you, but obviously that's coming towards the end. So like if we don't have some movement, like obviously I'm going to have that chat with other people. I actually would still have a chat with other people as well, and I would initiate that. just to sort of get some feelers on the market as well. But I will just uphold people to the standard that they set at the very outset as well.
Accountable.
Yeah,
Keeping them
exactly.
accountable.
And yeah, man, like just be driving things through from that as well. I would be like, are they doing all the things they said they were going to do at the start as well? Like why, get an understanding of why it's not selling for the money that, are you getting offers? Are you being unrealistic with your expectations? Or is this guy just not getting girl not getting enough interest or traction on the deal as well?
Be more curious with your question.
I think so, man. And I think like you've got to put a little bit of a stamp on it as well of like, I want a result out of this thing. I've put on the market to sell this thing. I need to get a result out of it. If you're going to get me the result, I'm going to have to be going somewhere else as well.
Have you had to do that with any of the properties that you've been selling?
Not recently, like not in this tranche of sales, but yeah, I've definitely been to agents before in the past.
Okay.
And probably like one of the other things that I throw in on that as well is like one of the other things you could do is at the same time as having that conversation go, hey, also just so you know, either if you potentially had another property coming to market, or it sounds like he's got another one there, or just go, oh, by the way, two of my other mates are thinking you're coming to market as well. They've asked me how you're going. Man, I need you to get this thing sold at the money we spoke about so I can send them over to you too, because they're talking about these other agents, blah, blah. And you mentioned the competitors, they're talking about these guys or whatever. And that should put a rocket up under his ass to do it, because you're still not like kicking him to the curb and going, or like putting the slap on him that I'm going to take it away or whatever. But you're going, hey man, like, let's get the money that you told me. Let's dangle the carrot in front of him of, get the new sale price that you told me you were going to get. And also these other sales are potentially going to come in as well if you can achieve that in that time frame too. All your competitors are going to get it. And you don't need to, this is the thing, you sort of say, it's like a passive way of saying it, you know what I mean? Without throwing it in their face.
Do you need to think of an answer when he does get you the deal and says, what are your mates' names? And what properties are they selling?
James Ibrahim and Winston Churchill.
Next question, second last one, Sammy. We're keeping on time. This is from John. Boys,
wait, do we have a John? We do. We have a John. And Johnny. I don't call him John. Johnny and Johan. Johnny boy.
There's not a Johan. Yeah. John.
Johnny boy.
Boys.
I was like, do we have a John? I was thinking everyone old. We've got Johnny boy.
I'd love to get your thoughts. I have an investment property that I'm looking to sell in the next 6 months. I will need to do a few minor renos to get it ready to sell. Question is, what checklist do you follow with regards to selling a property, with what renos to do and not to do? This is very relevant for you. You've been selling a whole bunch of properties. So have you had to renovate any of them?
No.
Okay. So don't do anything. No, what would you say?
No, definitely.
What would you weigh up?
So always when I get agents to go through and appraise a home, I always get them to go look at it and go, what do you think you could get for it in current nick? And what do you think you could get for it if you did whatever works you think are required on the house? And I always say, I'm not looking to spend a shitload unless it needs, like if it needs a kitchen or a bathroom, like if those things are stuffed, that's a different conversation. But if you go through it and the paint's are shit, the paint's shit, the floors are gross, like there's different things that need to be done that are going to catch their eye. Most like agents will know what they're doing. If you and I've broken down the way I select agents before in the past. If you're sending in the 2 or 3 best agents in an area, they're going to go through and they're going to go, nah, look, I think I'm going to get you best dollar for it, as is condition, because I've got renovators in the market or I've got investors who don't really care. And I think like they'll pay premium. They don't really care. They're going to be your main people who are going to buy this property. Because remember, you're always thinking about the end in mind, right? So you're always thinking about who is going to buy this end product. And that's what the sales agent should always be thinking of as well. And they may go through and say that, or they may go through and say, look, right now your primary buyers are your first home buyers or, downsizers or home buyers, right? They're home buyers. So we need to wow them when they come in for the open for inspections. The front needs to look nice. It needs to smell good. It can't smell like the cigarette smoke like it does at the moment. So I recommend we replace the carpets. We replace the floors. We give it a paint job, blah, 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 those sorts of things. I think that disparity might yield you an extra 30, 40, 50K, whatever it is, depending on the asset. And you've got to look at the return, because if they go, it'll get you an extra 15 to 20 grand. It's like, okay, sweet. Well, like, what's that going to cost me? If it's like 10 to 15 grand, it's got to be vacant for 2-3 weeks, and then it's got to go to like all these things to get an extra 15 to 20 grand. I wouldn't do it, for the sake of that loss piece as well. But if they're talking like it'll command a premium, I'll be able to get more buyers through, get more emotionally attached, and potentially command you another 50,000. 40, 50,000, different story. Even 30 grand, when you think about it, it's a 20 grand net difference. You sell 5 properties, that's another $100,000, right? So I think it's like really weighing it up. But if we're talking like 5 to 10 grand difference, I probably wouldn't worry about it. But they will know who the key target market is, and knowing who your key target market is will dictate what you need to do on it. And also obviously the condition when you walk in. But if it's investors or renovators or whatever, a lot of the time we don't worry about doing any of the works. But if it's a home buyer side of things, especially first home buyer side of things, you want to lull them in with that emotional attachment of like walk in, smells fresh, looks good, bang.
So is it important to ask this question before you even select your agent? Because will there be?
Sure, I would be asking when they go and appraise it.
Yeah.
What would you be able to sell it for in as is condition? What would you be able to sell it for with a bit of a spruce? And what would you recommend?
Right.
And they should always come back with, you shouldn't really need to ask who the target market's going to be.
Okay.
The top agents in the area should know. But then that's a general conversation you go with from there.
All right. Love that. There you go. John E.
Not Johnny B. John E.
Johnny E.
Johnny B.
Last question. This is from Anon. He's back. From the wilderness. Anon has come back.
Is he from Argentina? Did he cook us a steak?
What a way to finish off.
Oh, man.
Anon Julio.
It is Anon from Argentina.
I've heard you mention, Sammy, previously that Scott is a lifelong idol of yours. Have you been a fan of his for a long time? And have you based a lot of your investing strategy from his? Anon seems to have done a bit of research. I don't know where he's got that from. Maybe, did you release, was there an article that you've used him as inspiration? No. Is this the guy that doesn't wear any shoes?
Yes.
Okay. And invests. Now, so the question is, have you been a fan of his for a very long time?
No. I don't. There was this article that came out just recently. This is where this is flared up from.
Anon's been listening to these. He's got the scripts.
Constantly contradicting himself within this article about. It was the one about the new grants. And carrying on about how it's going to affect the market, blah, 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 which I agreed with. But then he went on to say, then all these it's bad for all these first home buyers because they're going to land in negative equity and they can't afford their repayments with rising interest rates. And I'm like, hang on, we're on a rate cutting cycle for one. And then you're talking about massive price growth, but then these guys are going to be in negative equity. And I'm just like, brother, in the same article, you're contradicting yourself, and you're supposed to be one of the key advisors in Australia for investors in Australian first home buyers. People are supposed to be reading your advice. But on one hand, you're talking about property prices going through the roof, which I agree with because all the fundamentals are there for them to go on a running cycle because of it. But then 4 sentences later, you're contradicting yourself by saying they're going to end up in negative equity and not be able to afford to repay their homes when rates go up. And it's just like. It didn't make sense. And I'm just like, I don't know, man. Like for people who know nothing about investing. And they need a budget, yeah, mad. Like maybe that he can show them the absolute basics around how to do that. But I don't just anything beyond that, anything more advanced. Literally articles like that, it just annoys me. You know what I mean? Like contradicting himself within something like that, it just annoys me.
Yeah. So he's not. You haven't been following his advice for a long time.
I don't really follow.
You know what? Actually, in all seriousness, when you think about, we talk about the circle of influence, right? And I've listened to a lot of Scott stuff from a long time ago. He's got a book that's been
very old, and you're a very basic investor.
But he's not a property investor. He's not a property investor. He talks about buying your house as quick as you can. And he talks about putting your money into an ETF, which is a low index fund. And he talks about saving money in expenses. So the question is, if someone like that, and not dissing him, but if someone like that is giving you advice around investing in property, well, they're not doing it. So there's got to be a limit. It's like you talking about crypto, right? Or shares. You don't do that. So why would you give advice around that and be so bullish on your advice? So it is interesting. I think Anon Julio has been on the hashish a little bit, and maybe he's overdosing on the chimichurri sauce. So it is interesting, that article. But thank you for correcting us on that. I think it's relevant. Like, look, in anything in life, right? Like, it's obviously this is a joke. Whoever sent this in, but it's like, you take advice or you follow the advice of people who've done what you want to do, right? And so, like, I would never, to be honest, man, I don't even diss stocks or shares or crypto or whatever it is because I don't really understand it. I know some people have made exceptional money out of it. A lot of people lost money on it.
Exactly, man. But, like, at the end of the day, like, I know property intimately. Okay. I've been investing for 16 bloody years. I've been investing nearly half my life now. And I know how it works. And, yeah, man, intimately with what I've been able to do, it just makes so much sense to me. And that's what I talk about. And so like when other people weigh in and then it just like contradicting comments on themselves, it just doesn't, I don't know, man.
You want to challenge the barefoot to a barefoot-a-thon and both have a bit of a debate around property. Should we get that? Should we put it out to the people? If you're listening to this and you want the bull shark to take on the barefoot investor in a bit of a friendly debate, you can shoes and socks off, right?
I walk in barefoot.
You do wear barefoot. You are barefoot most of the time at home.
Well, I grew up at a
and
farm.
in the office.
Yeah,
He's in a farm right now.
There you go.
He's a farm boy.
Let's go debate
farm
on the
boy
farm.
versus farm boy.
Mate, I'm happy to. The one thing I'll say, by the way, I'm always happy to debate anyone. Anyone wants to have a crack, let's go. But the simple fact is I actually agree with most of what he talked about in the article. It just made no sense what he said. He contradicted himself the other half of the way through it as well. I actually agree with the article, but he contradicted himself further through it as well.
It would be, I know we're joking around, but it would be quite interesting because he's a massive advocate on getting your house as quickly as you can and paying it off. So that's why I think would be great. Is there a bit of a consensus in the room? Like even Winston has woken up from his slumber to actually give us a bit of an interest.
I think he woke up to fart, but it's all good. Look, I think like at the end of the day, what's the debate going to be? I'm happy to debate him, but I think it's like, so you should debate around property versus non-property?
Yeah, like buying your house first or rent vesting. I think that'll be a great debate.
Yeah, let's do it. But I mean, I go back to my earlier point. By the way, fucking more than happy to. But I go back to my earlier point. He is for novice investors. His advice is for novice investors.
Oh, there's a first press conference battle.
But it's true.
I like it.
What sophisticated investor goes and buys their own home first and then kills their serviceability and then saves their way to retirement? You can't save your way to retirement. You can't save your way to retirement. It's as simple as that. That's why loans on a primary residence are a 30-year pay down. Oh yeah, let's bring it forward 20 years. 20 years? Like, are you kidding me? That's ridiculous.
But there's some fighting words there. I like it. No, they're not fighting, but there's.
No, they are fighting words. But it's, you know what I mean? Like it's.
I love it. I think we've got something. The producer's she's already starting the PR machine. We're gonna get this happening. We're gonna get it at the farm, on one farm somewhere.
I've got a farm.
You've got a farm too.
Come to the farm. Let's go.
All right. Anything you want to say? Anyone else you want to take on?
Should we have a shot at some other people?
Well, it's unlike you not to. So
I've had my share today.
That's enough for today.
Bring someone else up.
Well, you brought up someone else and we beeped out all of them in their strategy. That was brilliant. I spoke to someone about that on a call and they were like, who was Sammy talking about when he was beeping out every second word? Let's wrap it up before we get wrap it up.
No, someone else? Should we throw
No.
someone else?
Let's go. We've got tequilas and tacos waiting for us at Hotel Jesus.
Hotel Jesus. What else is there?
Let's wrap it up.
Listeners, thank you as always for tuning into another Scouting Australia podcast. If you took some great value out of today's episode, please make sure you send it on to someone else you think would take some great value out of today's
Barefoot
episode.
investor.
And if you haven't left a 5-star review yet and you're loving the poddy, please jump on, leave us a 5-star review on your favorite listening platform. If you haven't, hit the follow or subscribe button. Also, please hit that follow subscribe button on your favorite listening platform. It helps get the love out there, spread the love of people who are thinking, talking, acting about property the way we do, because we bloody love it and we know you do too. And until next week, guys, Jimmy, thanks for joining us. The last poddy with you in the Melbourne studio. I've got an investor story coming to you guys live tomorrow. Not live, I'm recording it live tomorrow. And till next week, guys, it's another Scouting Australia podcast. Thanks, Jimmy.